Hi, I'm Matt Dykstra, Finance Director here with the Billion Auto Group. Today we're going to talk about some of the differences between leasing your new vehicle and financing your next new vehicle. We know many people have different questions regarding what might be best for their situation and or their income or their budget. So hopefully we'll be able to give you a good amount of information today and really kind of help you decide what's going to be best for you in the future moving forward. The four main aspects that we're going to talk about are your upfront cost, your monthly payment, your mileage limitations, as well as what happens at the end of your term for your loan or for your lease. So when it comes to upfront costs on financing, there's a couple different things that come into play. The first one is if you have a trade or not. If you have a trade, we have to ensure that that trade is paid off properly. So what we'll do is we'll do an evaluation of your vehicle to see if you have what's called positive equity, meaning you owe less on the vehicle than it's worth, or if you have negative equity, meaning you owe more than it's worth. In a situation where you have positive equity, that really helps drive down the cost of the loan. In the event where you have negative equity, it means we're rolling some of the money from the other vehicle into your new vehicle. Now with this, you have a couple options as well. You can opt to put more money down to help offset that negative equity, which a lot of times banks like to see up to 10%. Bear in mind, we also offer 0% loans as well. So there are a couple different upfront costs that come into play with leasing. Of course, the first thing we have to do is make sure that the trade situation is taken care of, whether it be positive or negative equity. A couple of the other things with a lease to bear in mind is that sometimes on a lease they charge a security deposit. Very similar to other types of leases, say an apartment. You pay a fee up front to ensure that at the end of the lease, if there's any damages, the leasing company knows that they're taken care of. Also, what's different about a lease is you make your first payment the date you take the vehicle. The reason why is because you're paying 30 days ahead. The nice thing about that is at the end of the lease, you make your last payment, you know you still have 30 days of owning that vehicle prior to having to turn it in. With financing, we typically see your monthly payment be a little bit higher. The reason why is because you are paying interest on a large amount of principal. What that means is if you're financing a value of $40,000, you're paying interest on $40,000 that first month, and that slowly decreases over time as you make your payments, slowly paying more on principal than interest towards the end of the loan. The monthly payment on a lease is typically lower than on a finance purchase. The reason why is because you're now paying the difference between MSRP and the residual that the manufacturer sets. What a residual is the amount of money at the end of the lease that the manufacturer dictates the vehicle should be worth. So with a lease, if the MSRP is $40,000 and they set the residual at 50%, you're only paying the difference between $40,000 and $20,000. This allows for a much more budget-friendly solution to owning a brand new vehicle. When it comes to mileage and financing a vehicle, the best part about it is there's no caps. You can do whatever you want with the vehicle and it doesn't matter how many miles you put on it. When it comes to leasing, however, it is a little bit more structured. With a lease, they typically offer mileage packages in the increments of 10,000, 12,000, or 15,000 miles per year. The nice thing about that is you're not actually limited on a per year basis. You're limited on a total amount of mileage at the end of the lease. For example, if you do a 3-year lease at 10,000 miles per year, at the end of the lease, you need to have 30,000 miles or less on the vehicle. Now, if you know that you're going to drive more miles than say 15,000 miles per year, you can prepay those miles up front and have that included into your lease payment. However, at the end of the lease, if you come in and you did a 30,000 mile lease and you come in and the vehicle has 33,000 miles, the typical lease charge is about 25 cents per mile for those overage miles. So you would be charged 25 cents per mile for those 3,000 additional miles. Now, if you ever get in a situation where you know you're going to exceed those miles, feel free to come into any dealer and see about trading that vehicle out before you start incurring those fees. Even though you're leasing the vehicle, you still maintain the right to trade it in at any time. With financing at the end of the loan, congratulations. You don't owe anybody any more money. You will receive a title that'll be free and clear of any liens. At this point, you know you have a vehicle that you can continue driving without having any monthly payment, or you know you have a vehicle that you can trade in that automatically has equity because you don't owe anybody anything on it. When it comes to a lease and the end of the term, you have a couple of different options. The first option is you can bring the vehicle back into the manufacturer's dealership and you can let them know that you are done. What that entails is you bringing it in, signing a couple different forms, notifying the manufacturer that you turned the vehicle in, you hand your keys in, and you can go on your way. The second option is looking into trading the vehicle in. If you decide you want to lease another vehicle or purchase another vehicle, you can have the dealership do a trade evaluation. If the vehicle is worth more than the residual, you can trade the vehicle in and use that positive equity as down payment towards your next vehicle. If there's negative equity in the lease, congratulations, just hand the keys back in and you don't have to worry about it, and you can still lease or purchase a new vehicle and that lease no longer affects you in any way. The other option is you can purchase the vehicle at the end of the lease for the residual amount. Earlier, we used the example of $20,000. If you decide you want to purchase the vehicle, you can buy it for that $20,000 and the dealer will process all of the paperwork for you. All right, I just went over the basic differences between financing and leasing your next new vehicle. If you have any questions or want to learn more, please feel free to contact me at any time or stop in and we can sit down and go over what situation might be the best for you.